Our focus as a company is in women's health and oncology. So at the moment, we're focused very much on triple negative breast cancer with our Cytolytics joint venture.
All right, welcome back inside our proactive newsroom. And joining me now is Mark Eccleston. He is the CEO of Valorex. And Mark, it's great to see you. How are you?
I'm great, Steve. How are you?
I'm doing well, doing well. Good to have you along. Excited to learn more about what you're doing. I know it's a very innovative company that you have. Tell me a little bit about it for those not familiar.
Sure. So Valorex is a small cap pharma company. We're listed in the UK on the alternative investment market on AIM. So our business model is to basically scout for assets typically from tech transfer. So for example, from universities, sometimes from small pharma companies. What we're looking for are assets that have got really strong science and also commercial potential. So when we find those assets, we can basically review them. We can bring them in-house then under an evaluation agreement. Those evaluation agreements typically last a year, and we'll commit to spend some money on that, around 100K, to basically assess them. Before we make a decision whether or not to in-license them. So that in-license, for example, would be based on commercial decisions, but also obviously on the science.
Yeah.
So we currently have one in-license in a joint venture with King's College, the UK university. We call it Cytolytics. And we've got 3 evaluation programs underway at the moment. And yeah, they're about to come to a conclusion. We'll be making decisions on those going forward.
Yeah, I want to ask you about those in a second, but just on the model itself, two-part question. One, are there a lot of those out there that you look at, and is there a specific area that you concentrate on?
Absolutely. So, it's a very rich environment, I would say. And we review way more than we get to bring in-house, obviously. Our focus as a company is in women's health and oncology. So at the moment, we're focused very much on triple negative breast cancer with our Cytolytics joint venture. But yeah, we basically have a pipeline of agreements. Some of those move relatively quickly. Some of them, can take a long time to evaluate. But we maintain relationships with the various tech transfer organizations that we talk to. So we get to review these on a regular basis. And as I said, part of the trick is to basically find ones that are good science, but then also to find ones that have got the best commercial potential. So we're trying to minimize the time frame that between bringing in an asset, evaluating it, and then hopefully taking it on to be able to do a deal with that asset later on.
And the one you talked about earlier about that's the most furthest in your pipeline, I was reading at that, and the science behind it is very interesting. Maybe explain to everyone what that one's looking at.
Yeah, so cytolytics is very interesting. It's a cytolytic peptide. So it's a small protein that basically punches holes in the membranes of cancer cells. So it's got a high degree of selectivity, which is the USP for this molecule. There are some other oncolytic peptides that have been evaluated, but they tend to be non-specific for cancer cells, which requires them to be injected directly into the tumor. So the advantage of this approach is that potentially we can administer them, like a normal small drug, if you like, so by an injection. And it's interesting. We find it very interesting because it's got direct activity on the ability to punch holes in the cells and kill the cells directly. But if you punch holes in the cells, they can also release antigens, so things that the immune system can recognize. So it can be used to stimulate the immune system. So there's a big synergy there with immune oncology companies that have got other approaches in this area. So, it lends itself potentially to potential deals with those types of companies. Also, if you punch holes in the cells, then you can let small molecules into those cells. So classical small molecule drugs potentially work better in combination with this type of approach as well. So we've got, again, potential there for synergistic approaches with other therapeutic approaches and other companies therefore.
Yeah, and Mark, is that really the sort of the next stage? Is that when you decide that this is something that you think is worthy of taking the next steps, that you would work with a partner on getting it, trying to bring it to market?
Yeah, exactly. So we've got a limited budget. So the idea is what we want to do is have the biggest impact as quickly as we can. So we would basically develop a data package around the asset that we've got, and then we would look to partner that to basically take it further or license it at an early stage, depending on the types of deals that we can look at. And that's the kind of approach we've taken historically with some of the legacy assets that we have. So we have 2 legacy assets, Val201, Val401. And actually, they progressed into the clinic. Historically, we took them slightly further down the pathway. And they've been subject to potential out licensing agreements taking slightly longer than we would have hoped for sure. But I think we're making some progress in that area as well.
Nice. Let's talk about the year ahead, 2025. What can people expect from the company? I know you raised a little capital recently, and that was really to put into to try and increase the pipeline and taking really the next stages of what you're talking about.
Exactly, yeah. So the bulk of that, the bulk of the money we've committed to spend on Cytolytics and take that forward through this kind of preclinical pathway. We're also going to use it to exemplify these kind of synergies that I talked about with small molecules and with the immune system. So that will build out the potential there for deals with those types of companies. We have decisions to make on those three evaluation programs that I mentioned, whether we bring them in-house, whether we progress them. So that'll happen in the next month or so. And then because of the fundraising that we put in place, we also have additional money now available for bringing in additional evaluations. So we've got at least 2 or 3 that we've got, at the top of our list that we want to think about bringing in as the next kind of part of that pipeline for us to take forward. And some of them we have to pay for, some of them will be free to us to evaluate. So we're trying to get a balance between things that we pay for, things that we can bring in synergistically, that that we can partner with companies going forward. The other key thing for us, though, is that we really want to try and get a conclusion to the deal that I mentioned with our legacy asset, VAL201. There was an announcement that came out just earlier at the end of last year, where we basically given a limited time extension to TheumRx to basically close their deal. So they have announced that they're in the process now of discussing an M&A transaction, which would then put them in a position to allow them to execute the license with us and move forward on that deal. So that's a critical part for me to be able to draw a line under that.
Absolutely. Well, it sounds like it's going to be a busy next couple of months and throughout the year as well, Mark. Thanks so much for sharing this. As I said, a fascinating company and important work that you're doing as well. Good luck with everything, and we look forward to following your story, all right?
Thanks, Steve. Great talking to you.
Yeah, good stuff. There's Mark Eccleston, the CEO of Valorx.